Hi, my name is Alayla. I trade Trendlines, and I'm going to show you how I use the bounce method to get these setups on volatility 50. I start from the highest time frame possible, make my way down, doing top-down analysis. Alright, that's basically how I do it. So, this is simply using the bounce method, simple retracement to the higher time frame trend line, wait on the break, put my stop at a safe place, and target the level that started the retracement in the first place. Disclaimer, I am not a financial advisor. You heard how I started the video. This is how I use the bounce method to trade. Alright, this is how I do it to trade. Alright, so what we can see here based on the chart, we see there's a big curve. There's like a huge curve we're seeing there. Alright, we see a big curve. Ooh, that's the curve there. Now, when you have a curve like this on the chart, there is no possible way. It doesn't make any sense. Alright, it's going to continue curving. It's going to always break your trend line. So sometimes it doesn't make sense to have a trend line like that. You can come down to the recent side of the chart. Alright, you can come down to the recent side of the chart and see if there are highs to see if there are swing highs to connect to your trend line, of course. But if you draw it like this to this, it's gonna constantly break your trend line. This was the last high here, break your trend line. If you even connected it to this high, break your trend line, break your trend line. So that doesn't make sense. Alright? Now we see the current side of the market is pushing, it's pushing to the upside here. It broke above this high, so it's pushing to the upside. This is what we should focus on. This is where I draw my trend line from the lowest point connected to the second point here, ensuring that all candles are on one side of the trend line. Then, if we see that the market has pulled away, or in this case, pushed away from the first initial trend line that we drew, we can definitely come in with another trend line. You can add others as we go along, from there to here. So we definitely know that the market is respecting these trend lines as it pushes to the upside. Now, for the setup, we are focusing on this side. But before we get into that, I have to have my key levels on the chart. If it makes sense to have key levels on the chart. The market has only been here once based on what I'm seeing here. Based on what the chart is showing me, maybe if I go on CTrader or MetaTrader, it's going to show data from years ago. But based on what I'm seeing here, I'm only seeing what the chart provides right now. Alright? So, doesn't make any sense to come in with any key levels, to be honest. Alright, so the current side of the market, now we see the retracement, a retracement here, retracement here, retracement here. Whenever there's a retracement and you see a trend, that's when we can use the bounce method. Alright, whenever we see a retracement and we see a trend, let me demonstrate while I'm talking. Whenever we see a retracement and we see a trend, swing high, swing low, swing high, swing low, we can ride that trend. Alright, as it progresses towards another trend line, we can definitely ride it. Now, as the market makes its way towards the green trend line here, we go down to a time frame that shows us a trend, shows us the proper trend that we're looking for, that shows us structure, highs and lows properly. If we're just on the 24-hour time frame, we don't really see much structure. We just see like a one candle pullback. But if we go down on the lower time frame, we'll definitely see structure there. So let's drop to a lower time frame. So we're on the 4-hour time frame. The 4-hour time frame is showing structure here. Now, the difference where I see a lot of people, they're getting this wrong. I have different trend lines with different meaning. Alright, so for my high, when I'm on the higher time frame, the trend lines that I draw on the higher time frame, like the 24-hour or the 4-hour time frame, those are just for directional move. All right, so even if it only has one swing high and one swing low, um, after the first point, like in this example here, after the first point here, if it only has one swing high and one swing low, I can definitely draw my trend line, because this is just for directional move to say, hey, the market is in this, it's pushing, this is what the current side of the market is doing. All right, this is just what it's there for. But for retracements, for setups, the trend has to develop properly. All right, if the trend not develop properly, it can easily break a trend line and you fall for fake outs then. So this is just for directional move on the higher time frame. When there's a retracement, that's when the rules of a trend apply. That's when you have to see multiple swing highs and swing lows that make the trend valid. You're gonna fall for fake outs otherwise. Alright, so I'm not really seeing much structure on the 4-hour time frame, so I'm gonna go down to the 1-hour time frame. On the 1-hour time frame, as the market is heading down towards this green trend line here, this higher time frame green trend line that I marked out on the higher time frame, let me repeat that again. As the market progresses towards that green trend line, I will look, as long as it doesn't break the red trend line, I am fine to continue looking for shorts. All right, as long as it doesn't break that trend line. If the market is falling, I see a retracement coming with the trend line, and that's what we're going to look for, because we're heading towards that green trend line that you see on the chart right now. So we're going to wait on a pullback. All right, when the market is retracing, you have to see like a change of character. So we need the market to close above this high, and that's exactly what it did. So when we get a change of character first, that shows that the market is gonna do its retracement. It just a reverse, a time for jump out of the market. If you're in that sell, if you're in this sell, a time for come out of the market. All right, changes change when you see change of character, that signifies a reversal. It definitely does. So now we wait on a trend to form. All right, so we're definitely seeing swing highs and swing lows. We have a trend here. We can come in. Now we can add our trend line. We have two trend lines. We see that the market is falling towards a higher time frame trend line. What you can do, you can target the low down here that started the retracement, or you target the green trend line that we saw, the higher time frame green trend line down here. No, as I said before, if the market doesn't break the red trend line, we're still in for shorts. If it breaks it, that's when we look for longs to go with the higher time frame. Let's continue. We just wait on the break of the green or the red to really tell us what to do, to be honest. There we have the break of the green trend line. That's when we enter for the shorts. Or stop is above the last swing high that the market created. And then you target either the swing low down here, or you target the green trend line. It just depends on what you want to target, the risk to reward that you want to go for also, and then you watch the market play out. Alright, seems to be retesting the trend line there. Alright, and then eventually it fell. This is exactly what I'm saying. I draw my trend lines on the higher time frame for a directional move. If there is a trend, I wait on a retracement. The retracement has to form a trend, swing highs, swing lows, coming with my trend line. Whenever that retracement trend line breaks, that's when I enter. If it doesn't break my retracement trend line, it's gonna break the higher time frame trend line that I drew. If it breaks the higher time frame trend line, I must wait on another retracement after the break. It's a tricky thing that we're doing here. Tricky thing. Now, let's continue. That's when we'll completely exit the market. Now, let's see. Do we get a change of character? We need the market to break above this high. We need the market to break and close above that high. And yes, it actually did. Alright, so we have a break and close there. That's where we see the change of character. Now we wait on a trend to form. We should have swing highs and swing lows, multiple. Alright, we come in with our trend line. And then you wait on the break. If it doesn't break the green, it's gonna break the red. And that's how you do it. And that is how you do it. Alright? Very simple explanation. That's how I did it. I am showing how I use trend lines, simple bounce method to analyze the market, get my setups to show that the chart doesn't have to be complicated. It does not have to be complicated. Sometimes all you need is 2 or 3 trend lines on your chart and you're fine. So that's the end of the video. Thank you for watching. Thank you, my friend. Thank you for watching. And I'll see you in the next one.